for learning about trading and investing. Welcome to Markets. Next week, the weekly stock market show, where we look at the technical charts and try to understand what happened in the market in the previous week, and also plan for a better trade that's starting from tomorrow, July 7th, Monday, 2025. Let's deep dive. Here we go. This is the weekly and the daily of the Nifty charts that you're seeing. We'll just understand the bird's eye view, etc. So we see that there is a parallel channel, and recovery has been happening since last several weeks, almost 3 months, and 18% nearly recovery has happened, and market is showing the symptoms of a breakout, and then it has taken a pause this week. Similarly, the daily charts also show it's in a parallel trend line channel and broken out of that, and it was heading towards the all-time highs when there is a pause that has happened in the last 5 days of trading. And Banknifty shows a very steep presenting wedge pattern, and it has hit the top of that and then taken a small pullback. On the daily charts, it's in a parallel trend line channel top, hit the channel top, and then taken a pause, a pullback. So what exactly happened? So it was 181 points of cut on Nifty and 419 points down. That's 0.73% down on the Banknifty. That's a very small pullback considering the ferocious outbreak attempt that it did last week. So that was can be understood as profit booking, or some kind of resistance that comes in before it takes down the previous all-time highs. And remember, we are in 17.5% and 12.5% of correction that has taken in a nearly 70% of rally from 2022 onwards. So we are in a bull phase. We had interim corrections of 17-18%, and now we are heading towards new highs. It seems like that's what the chart is showing, and there would obviously be pullbacks and profit bookings and resistances on the way is what we can understand. So candlestick patterns, if you analyze weekly candles on the left side and right side of Banknifty, left side Nifty is showing that it is kind of a bull trap. It trapped the bulls by who betted previous week on the long side got trapped. It's obvious, and same in Banknifty also. It's almost like a hammer. It's not exactly a hammer with a very long wick size, but looks like a hammer with a body on the top and a long tail at the bottom. So hammer on the perfect hammer on the top may make sense, but this may not have any elements. Regardless, if the law of the hammer is breached, then it would mean that it's a reversal. And so bull traps are bearish, obviously. We trap the bulls, but this is not a confirmation of a bearish trend as such, considering all other factors, which you'll see eventually in the next slides. So bull trap is what's shown in the weekly charts. Now look at the daily charts. 5 days of trading, what has happened? See this, it is down almost all the days. Steady pullback, profit booking, clearly steady pullback. Market was consolidating. Market was waiting for some things to happen from the US tariff side or things like that. So that is exactly, we don't know whether it's going to end now or not, but one thing we know that it is pullback towards a support zone, which could give a possibility of a change in polarity, bounce up from here. Right, so previous breakout zone could act as a support now, and then a bounce from here could happen on both indices. That's what we can understand from the daily charts. And the Friday's candle is almost a hammer in the case of both indices, which not a perfect hammer, but a hammer on the downs, on any trend up or down. So here's the down, indicates that there could be a bounce up that could happen, and also there is change in polarity confluence also coming in there. So that's what the candlestick is indicating. Right, this here is a summary of that. So the pull trap hammer weekly on both indices, and an inside bar. Also, it's an inside bar. I forgot to tell that. So inside bar means that the candle is absolutely inside the previous candle. So it shows some consolidation that's happening in the market. This is weekly, is not the daily is a bull. Daily candlestick on the Friday is a inside bar. So basically, the market has paused the rally, taking a shock break. Previously, it was breaking out from towards the all-time highs, and some profit booking resistance naturally came in, as I said before, and now it has receded to a change of polarity zone, support zone, where the previous resistance could act as a support, and then bounce could happen. By the way, Banknifty is on all-time highs, and Nifty is yet to clear that, very close to that, probably less than 1,000 points down. And what about Bollinger Bands? Bollinger Bands are showing that it was walking on the bands, but it is now taking a pullback from there, but it's still bullish biased, and it is an expanding bands, which shows that more up moves are possible in the Nifty. Banknifty all the same, expanding on the upside. That's what it's indicated here. So it's bullish expansion, bullish bias expansion, indicate more up moves on the daily charts of Bollinger Bands. Let's move and try to understand something from the indicators. So RSI is the momentum indicator and trend is ADX. Two indicators 80. So RSI shows that the bullishness is fine. It's maintaining the Nifty is maintaining the bullish momentum. Banknifty also maintaining the bullish momentum. Banknifty slightly slipped actually in the short term. The daily charts, like you see here, Banknifty slightly slipped. Right. What do you see on the left side? Banknifty RSI is falling, but it's in bull zones. It's up. So Banknifty slightly slided, otherwise momentum is maintained, and ADX is maintaining the trend, showing that it's maintaining the trend, although there's some fall in this trend that's happened on the short term, but it's the bullish trend and the bullish momentum is more or less intact, is what we can understand. On the right side is the volatility index. Volatility index India VIX, showing that it is absolutely flat. So it's at 12.5, which is low volatility regime, right? Which indicates that there is very less fear that we've just gone to 18 and 19, 20 kind of levels earlier during the tariff declarations of Trump and the India-Pak war and the Iran war and all that. Now those things are cooled off. Is what India is also indicating low volatility regime, which is in favor of the bulls, of course. Moving ahead, if you try to understand the open interest analysis, it's showing that Friday had a short covering rally on both indices. A very small short covering, not a huge one as the volumes indicate. Now the open interest for the July 10th and the Nifty weekly and the July 31st Banknifty monthly expansions are showing that it's near to bullishness. I guess I can't say it's fully bullish because Nifty is 0.09 less than 1, which indicates slight bearishness, but overall we can say PCR is near to bullishness at least, right? And futures are, we already seen that it's bullish. So what you see here, the graph here is the amount of the number of puts and the call writing that has happened for the weekly expiry and monthly expiry of the Banknifty. So actually we can find the levels indicated here. It remains more or less like last week itself. 25,000 and 26,000 is the level where the highest put and call writing is seen, and 25,200 and 25,500 is the level where the second highest put and call writing is seen. While Banknifty 56,000 seems to be the crucial level of support, and 57,000 seems to be crucial level of the resistance. So Banknifty 56, 57,000 is the levels. Nifty 25, 26 is the levels. It's absolutely bullish. And short covering futures OI and PCI also almost near to bullish, as you can say. So it's the way of finding the levels using the options of OI, open interest. Now another way of finding the support or resistance level is using the charts. So we see that there is a support zone. This is the change in practice zone that I was talking about. Now let's drop now from that final channel. Some pullback before the gap resistance that is there, and then previous resistance is coming very close by 25 650 zones, and then 25 850 zones. So 740 would have a gap, 850 would have another resistance, and then all-time highs before that 26,000 rounding number resistance also will be there. Support obviously is the 25,200. If that is breached, it goes with 25,000, and also the 20 and 150 exponential moving averages would act as a support on the way down if it pulls back and falls into the panel channel once again, which is less likely given the normal and the trend. Similarly, Banknifty is in the has pulled back once again. The top of the trend line channel near the 57,500 will be the major resistance, and after that will be 58,000, and then it's all-time highs. So sky is the limit. And it pulls back 20 exponential moving average at 56,500 will be for support, and 56,000 rounding number of support, and then it would come into the previous breakout zone somewhere at the 50. So 56,000 is very crucial as per the OI as well as the charts. And the 55,500 nearby has got a 50 exponential moving average, and then 55,000 rounding number is support, and 54,500 again is the previous breakout zone, so that could actually support as well. So those levels are marked here. You can take a look and then correlate that with what levels the options are indicating, and then take it bet on the upside and downside support resistances accordingly. Let's move on. We would look at the different sectoral indices, the major ones, the 6 of the major ones. That's the IT, metal, auto, pharma, FMCG, and reality. So you can see that it's basically maintaining this sideways. None of them has climbed into the bullish momentum on the medium term. We're talking about weekly charts. So that way it is maintaining the sideways is what we can understand. Last week also was giving a mixed bag. The defensive sectors of the IT and the FMCG has IT and the pharma has moved up 2% and nearly 1%. IT pharma is 2%. So apart from that, it was all either down or flattish. FMCG and reality is down. Right? Look at this, 2.2% reality. Metal is also flat. Auto is also flattish down. Right? So it's maintaining the sideways movement is what we can understand from the sector interest. So let's move it. Heavyweight stocks, they're doing beautiful, especially the HDFC banks, the Reliance, and the ICICI Bank. Look at the moment. This is a range shift on the HDFC Bank, which indicates that any breakout from here could be big because it's price pattern parallel channel breakout, but the volumes are not above the moving average sole issue. Reliance also seems like it can head towards the top. Very high possibility of that hitting the all-time, hitting the channel top. Volumes are good, momentum is good, trend is good. Actually, the bank also bullish momentum trend, and it is having multiple divergences, positive reverse divergence, which indicates that it can hit the all-time high continuously ahead. So these are the 3 stocks that's holding the market. Otherwise, IT stocks are not doing that great, but maintaining the sideways, we can say. It's Infosys and the TCS. Kodak Bank is a contrast stock, and it is moving up and down within a range. That's what it is doing. And now it just slipped sideways from the bullish momentum. ITC also sideways moved since long. I'm trying to maintain that. So it's usually a long consolidating stock. So that's what the index heavyweights, major ones are doing good, and that's keeping the market. Different sector indices are maintaining the sideways, but not at bullish. So broader markets, if you see, it's green. There is also trying to make new all-time highs. What you can see, although there is a small industry pause that has happened last week on the mid cap and the small cap, as you can see, the momentum is absolutely bullishness in the medium-term charts. So broader market is also moving along with the indices, gives a good indication that the market is bullish. Now let's move on and try to understand how the institutions are participated. So FIs have turned to be sellers of 6,600 crores in the cash market last week, and that's after multiple weeks, those 3 weeks of buying that happened from the FIs. So that's not a great news, and domestic institutions has been buying, and 7,600 crores of buying has happened once again. So that's a story. So the net longs on the derivative side for the FIs and DIs have moved down actually last week slightly. So institutional participation has pulled back is a worry, and global Qs were absolutely great last week, but this week it's more or less made it the same. The dollar has weakened slightly further, which is good for emerging market like ours. US dollar has slightly moved, has stayed flat with nothing happening, which is also good. So it had gained a little bit last week, not a little bit, substantial good improvement of the fall down of the rupee. USD has happened. That means rupee had appreciated, and this week it's flat, which is good. Dollar also is trading below the 100, which is also good. So currency wise, it's good. Commodity wise, crude oil had also taken a big beating of nearly 20% fall after the war has got cooled off. So that is also good for oil importing country like ours. But this week it's a slight green, slight move, bounce of 2.5% has happened in the crude oil, but that's okay. So things are still in favor of the markets, you can say, right? But small bounce up, small green has happened on the crude and the gold. But US market is absolutely bullish, and it's an all-time high. That's big news. From the bullish momentum, and then it's all-time highs on S&P 500 and Nasdaq and Dow Jones. All of them in bullish momentum and all-time high. So US market is another market that's being bullish is always great. Now we'll look at some actionables. These are not trading recommendations. Risk is yours, the capital is yours, the money is yours, the decision analysis, everything is yours. This is only for education purposes. 2 stocks for the next week. RBL Bank, a beautiful breakout from the cup and handle pattern. Still scope for more move towards the all-time highs. 1:2 RiskReward. Momentum is bullish, trend is bullish, volumes are good, pattern is good, bullish. Reliance Industries has a scrap of 1:2 square towards the top of the trend line channel, good volumes, momentum, trend, everything bullish. Price pattern within the trend line channel, very bullish. Reliance and RBL Bank are the two stocks before next week. Again, for the strategy, on the Nifty, Batman strategy is what you see there. Not completely risk defined. You can buy the wings on both sides, but then profit will be very less. But it's going to be giving a very good range and very good profit. Reasonable risk reward if you exit early. So very good range. You don't have to do anything unless market makes big downfall or big up move. As long as it remains between 24,600 and 26,000, things should be fine, which is likely to happen. Even if it breaks out, it may fail some resistance at 26,000 is assumption. So very good profit, and that's a way. Batman strategy is like OTM selling and then taking inside hedges on OTM. Right? You can see what is sold and what is, and you can understand what is the trade. Well, if it breaks out of the break-even point on both sides, and just exit instead of trying to adjust. Right? So it is within 2 standard deviations. That's a range that we are getting. So very less likely the market breaks out of that often. That's it. Let's try to wrap it up. So market had pulled back and paused in the midst of a breakout rally of the previous week, and then this week it is closed negative with the momentum slightly slipping in the case of short term, but otherwise momentum of the trend is maintaining their bullishness. But if I also turn back the sellers last week is quite a bit worry, but remember that it's a 7.5 and 12.5% of rally and a 70% of rally that has happened since 2022, and we are still in that bull run, I would say. But if you try to bucket all the different factors in favor of the bulls and the bears, this is how it looks like. More weight is towards the bulls this time. US markets are bullish, India VIX is low, other indices, PCR is bullish, and the Banknifty especially, futures OI is bullish, trend and the momentum is bullish, maintaining that bullishness at least, and prices about to next vision moving average. Only bands are bullish biased, expansion on the upside. Heavyweights are maintaining the momentum, and broader markets are also maintaining the momentum and showing some green and touching very close to all-time highs. So crude oil is low, gold is falling. Rupee has gained a little last week and maintaining that flattish. All that we had analyzed. So all things in favor of the bulls this week as well. What's in favor of the bears is the fact that the FIs have ended up net sellers. That's good news. And the banking index is doing good, but other sectors are still not bullish yet. That's the thing that you have to be worried about a little bit. And momentum is bullish. PCR trend is also bullish, but medium to bullishness has slightly slipped in the case of Nifty. Options PCR on the Friday showing Nifty is less than 1 PCR. That is also not that great. So few factors in favor of the bears, but otherwise overall you can see that it's bullishness in there. But you have to be cautious. Market is at very close to all-time highs. Resistance will be there. Banknifty is already broken out and it's at new highs. And there's US tariffs and all that volatility could come in. You have to be cautious. Cautiously bullish is my market for the next week. Remember that technical charts won't work when there is major events like war or interest rate hikes or tax war and all that things. So technical charts will give you an idea about whether resistance supports are likely. But when lax runs happen, nothing works. Keep that in mind. So therefore the levels for the next week is 24,000 and 26,000 on the Nifty, and 54,500 and 58,000 for the levels in the Banknifty. So to about 26,000 and about 57,000 if the market maintains, and then that's where the next leg of the rally begins. Until then, we're just struggling to take out the resistance. We're consolidating, or we are pulling back and then correcting. That goes on until these levels of 26,000 and 57,000 is there. So always hedge your portfolio, hedge your positions always, right? So that's all. The risk management is all about, trading is all about protected capital. Always use hedging strategies for making money using rental income. Also using strategies like cash to get puts and all that strategies. Check out the playlist for that. That's all I have. Thanks for watching. If you like the content, subscribe, like, comment, share, difference. That's happy trading, happy learning, happy investing. Bye bye.